Hey there, everybody. It's Russell with the rbgroup over at Live 38 Real Estate. Hope you guys are having a beautiful day. Today, I just wanted to bring you guys some market data. So we have the October market report out, and there's been a lot of concerns lately. Interest rates going up, obviously, which they have in response to inflation. But unfortunately, a lot of buyers are also holding out either for interest rates to come back down and or for our market prices to drop. And I'm here to tell you that the data does not support that. I think by the time anyone who's waiting for prices to bottom out would be immediately counteracted and rendered moot by the interest rates continuing to rise. And they're forecast to continue to go up in response to our historic inflation. So if there's any of you who are wanting to buy and on the fence waiting for interest rates to come back down or for prices to bottom out, it's just simply not in the forecast. Now, none of us have a crystal ball. None of us can see what's going to happen, but the data does not support it. So let's take a look at some of that stuff right now. So right now we have 597 active listings on the market, and our absorption rate has been edging up towards what we consider a balanced market. Technically, we're still in a seller's market. Anything under 4 months is considered a seller's market, 4 to 6 months considered a balanced market, anything above 6 months considered a buyer's market. And you can see very, very clearly on this graph where interest rates started going up, the amount of inventory and how long it would take to dissolve that inventory has steadily gone up since then. What's interesting is coming down to days on market. Now, a lot of people think that homes are sitting for longer right now, and the truth is they are almost identically on par. They're actually a little bit under what they were a year ago. So last year this time, average days on market was 46 days. Right now we're at 42 days. So not much has changed in that regard. Now, here's another interesting thing. Our sold to list ratio is at almost 96%. Now, what that means is what homes are being listed at is almost 96% of them are being sold at that level. So homes are being priced fairly, and that's a really good sign that the market is where it should be. And we are actually heading towards a much more balanced market. The growth that we have seen in the last 2 years of appreciation being 20, 30%, is just unsustainable. I mean, it was great for anyone selling at the time, and interest rates were super low, and a lot of money got moved around in the last few years. But that kind of growth is not sustainable. We would simply be pricing out buyers in no time. Is actually needed. We need a little bit of a slowdown here. And something interesting, I want to pull this up, is there was a study done from a couple different arenas, Fannie Mae, Freddie Mac, National Association of Realtors, all economists on their forecast for what they think home values are going to do in the coming year. Again, nobody has a crystal ball, but of the 6 ones that submitted their forecast, only one of them showed a depreciation of 4%. That's this Zelman over here. But all the other ones show appreciation, and the national average shows to be 1.8% appreciation, so just under 2% appreciation, which isn't anything spectacular for anyone, but it is still a positive gain. And to look at an even larger broadcast, because this is something that I bring up a lot of times with buyers, investing here is not a short-term thing. Really, any investment for the most part is not for short-term gain, unless you're flipping homes, which obviously that's a different ballgame. But in particular in this area, people are buying for at least a year, at least 5 years, sometimes upwards of 10. And this is a fun little graphic that have showed the appreciation of homes over time in the last 30 years. So, it's like, geez, 30 years, that's a long time. But, you have a 30-year mortgage. A lot of people are moving here and they're building or buying their forever home that they plan on raising their family in. So, you got to figure maybe they're going to be in it for 20 years. Maybe they're going to be in it for the rest of their lives. And it's really cool to see that in Florida, over the last 30 years, on average, this isn't the entire state of Florida, we have seen 422.5% appreciation in home values. Now, to get even more niche than that, our area in particular, 30A, in the last 30 years, has seen an appreciation of 1,400%. So we've had this discussion before, but our area is undergoing some massive, massive changes and developments. We've had incredible infrastructure currently going in. We have over $1 billion in development currently being built and cleared out and prepared as we speak. Projects that have been greenlit that we won't see come to fruition for another 5 years, that kind of stuff. So, our market is ripe for growth and further appreciation, and we're kind of in a unique position right now in terms of our area that it's always been desirable because the beach is so beautiful and people want to have the lifestyle and they want to have the investment property and the second home. And we have so much natural beauty here and such a great community. But we're starting to see an influx, especially after the pandemic, of people calling this place home, wanting to call it home permanently, working remotely, and they're figuring, hey, I can be here, I can bring my family here, I can live this lifestyle every day. And those full-timers that are here, I mean, this used to be snowbird territory. We have full-timers here now. We have a very strong community of young families, up-and-comers, lots of entrepreneurs, and there is so much commercial and residential development going on right now, and it's a really exciting time to be down here. So, all that said, when it comes to the market, yes, our market is adjusting, but it's adjusting to a more balanced and sustainable place. Again, if you're waiting for prices to bottom out 30%, don't see it happening. If you're waiting for interest rates to go back down to like 2.5%, 3.5%, don't see that coming. I think, for most part, the forecast is showing maybe coming back down to a more 5%, 6% level, which historically speaking, the average over the last, I want to say like 50 years, has been around 7%. That's kind of a normal interest rate. And I think a lot of people lose sight of, where we've come from and the things that we've already endured. Yesterday's news is forgotten. But a good analogy that I've heard used and I like to use is, I think for the last few years, has been kind of like driving on the interstate. And you're doing about 75, 80, and you get off at the exit and suddenly you have to do 50. And it feels like you're moving through a school zone. You're still moving 50 miles an hour, but coming from the interstate, you really feel like you're just moving at a snail's pace. And I think that's what a lot of people are projecting on our area right now, and the data just doesn't support that. Our home values have gone up to the highest point ever. Our average sale price right now is 2.6 million along 30A. And that's the highest it's ever been in recorded history. So we are still seeing appreciation. We're seeing things sit for about the same amount of time they were last year. Our absorption rate is one of the bigger driving factors right now that we are moving towards that balanced market. So hope that helps you guys. Please feel free to reach out either to myself or Blaine. We are so grateful for you guys, and we're happy to help in any way that we can. So hope you guys have a beautiful day, and take care.